All right. Hey, everyone. Nice to be here. Thanks for inviting all of us to the conference. And, it was funny. We were thinking it's all non-IIT Bombay folks gate crashing an IIT Bombay party. So that's the fun of it. Me and Nitin are from IIT Delhi. Priya is from IIT Banaras, BHU, and Ankush coming from UIUC. So none of us are IIT Bombay folks. And in my time at IIT Delhi, we used to be fancy. I used to fancy IIT Bombay a lot. There's so many entrepreneurs from IIT Bombay. So we always like IIT Bombay guys make all the money. That's what we used to call on campus. So and I think it's great that we are having this session, and I am highly honored to be to moderate this session along with Nitin, Ankush, and Priya as speakers. It's great. We have three different entrepreneurs, being backgrounds, deep background from actually the fintech space, multiple years, multiple geographies, and interestingly, the way the panel is set up is all the three of them are doing businesses in three different models and three different businesses, three different markets of fintech. So it's a wonderful panel setup, and hopefully we are going to have some insightful discussions. What I would request is each of the panelists to talk about a little bit about their business, the problems they're solving, the problems they see, just to introduce themselves. So maybe I'll start off with Priya first. Priya, if you could tell us about Zest Money, that would be great.
Sure. Thank you, Prayank, and good afternoon, everyone. I'm Priya. I'm co-founder and CFO of Zest Money. Zest Money is today India's largest buy now, pay later company, as its buy now, pay later has now emerged as an interesting product worldwide. And there are a few companies globally that have been in the news very recently for, multi-billion-dollar IPOs and things like that. We started Zest Money about 5 years ago, and we realized that there was a huge need for changing the way in which we do credit. We realized that most of the consumers were extremely digital. They were mobile savvy, they were tech savvy, while some of our dear banks and NBFCs were not so much, and they were more branch based and very paper-based process. So we focused on creating digital credit for the young India, and we very quickly realized that the young India is also very aspirational. They are always looking to upgrade their lifestyle. They're looking to buy new things, and therefore we realized that there was a huge opportunity for us to create credit that was contextual, that was tailored to their needs, and something that was actually available at the point of sale or at the point of checkout or wherever they actually needed it. And what we have built is a technology platform that plugs into various point of sale mechanisms, and we provide real-time credit at the point of sale. So that's a little bit about us. Happy to go deeper post the other intros.
Priya, it would be great if you could also add how big Zest is, like number of distribution points you guys have.
Sure. So we've got about 3,000 merchants live currently today. These are the unique merchants, not including the storefronts. We are online as well as offline, and currently we've got about 8 million customers signed up on our platform. That's our scale.
Wow. Ankush, would be great to hear from you next.
Great. So I'll just take 2 minutes to introduce myself first. I think first of all, good afternoon, everyone. And I would like to thank the team for having me here. I truly feel like I'm gate crashing this event, as you said, Prayank. Not only am I not an IIT Bombay alumni, I'm not even an IIT alumni, right? Instead, I actually did my undergrad from University of Illinois, UIUC, where I graduated in 2016. Anyways, it's a pleasure to be here along with Nitin, Priya, and Prayank. So to quickly introduce Avail to those who might not know about us. So Avail is a fintech focusing on financially including the blue-collar segment in the country, in India. This includes profiles like office boys, waiters, domestic helps, etc. Someone who's otherwise financially excluded from the organized financing channels. and instead have to borrow from their friends or family or local money lenders, etc. We at Avail are trying to bring this segment of the population under the financial umbrella. We have focused exclusively on personal loans until recently, but what we are trying to build is something much bigger than that. Fundamentally, Avail is a consumer in or a customer in company, not a product out company. We are creating a platform where a blue collar, low income group, semi skilled, unskilled employee in the country can come and live their entire financial life on. And to enable us to do that, it is important for us to not just be a transactional lending platform, but actually build a relationship focused business. And that is where the neo banking product for Avail comes into the picture, which is something that will go live very, very soon. And what we are trying to do over there is trying to reimagine what the salary account for a blue collar employee looks like. Uh, Basically speaking, the salary account in our life is the most powerful account, right? Any financial product being sold to us is linked to the data that we create on that account. And that is why most of the people attending this panel or even us, we've gotten multiple SMSs, IVRs asking us to buy financial products. But that same account in the hands of a domestic help or a security guard is almost rendered useless. It's just a store of value and not anything more powerful than that. Now we want to reimagine the entire world, and we want to work backwards from saying we'll make the same salary account the most powerful account, even for a blue collar employee. So that is broadly what we are doing at Avail. In terms of what stage we are at, so we are active pan India, service close to a million customers till date over the past 3 years, growing aggressively, doubling every other month. Team of 150 people, and like the rest of the panelists, Nitin and Priya, we are also based in Bangalore.
Super. Thanks, Ankush. Before Nitin comes on, I need to let you guys know the conflict of interest. So I have invested in Nitin's company. I know in Nitin for a very long time, and Nitin, it would be great to hear about what you're building now. So.
Prayank, you have stated the conflict of interest. You can state the thesis as well. Hi, everyone, and thank you very much for having me over. I am a founder and CEO of a company called Uni, and what we are building is credit cards. We are still under stealth mode, and we hope to come out of our beta sometime in mid-April. But let me give you the thesis. There are multiple theses which are working on why we are doing this credit cards, but I'll share two of them. The first thesis is that credit cards is a fairly large market and growing very fast. So there are about 35 million Indians who have a credit card today, about $100 billion in spends in India, $7 billion in revenues, and about $1.5 billion in PBT. And all these numbers are growing at about 40% CAGR. And if you look at this 35 million Indians, right? If you look at any first principle analysis, you can easily predict that this 35 million Indians will become 100 million Indians with a credit card over the next 5-7 years. So today, about 190 million Indians have a credit score. More than 100 million Indians transact digitally. More than 150 million Indians transact at a POS terminal. So all these data suggest that there is no reason on earth why this 35 million Indians should not be 100 million Indians with a credit card. And वो कहते हैं ना वैदी गंगा में हाथ धोना. Basically, if this macro trend is happening, you can build great credit cards, right? You can ride this wave, you can ride this trend. That's the first trend we are aiming for. The second thing that we are aiming for is that if you look at the existing credit cards, they are not feature rich. They are basically the tech stack. The existing credit cards, and most of you would have a credit card. They're built on two tech stacks in the country, and both those tech stacks are very legacy tech stacks. And as a result, you don't see credit cards to be feature rich. Let me take some examples, right? We all use UPI extensively, but none of our credit cards work on UPI. Or all of us use credit cards primarily with the intent of earning reward points. But you all know that you have to log on to a third-party portal, see your reward points, and then redeem them for some stupid gifts. Or for that matter, some of you may have add-on cards. And the OTP on an add-on card, when you're doing a transaction with your add-on card, still comes on the primary phone number and on the secondary phone number. As a startup, you would solve all these problems like in a week's time or overnight. But as banks, because you're constrained on technology stack, the product is Product fundamentally is quite poor in terms of features, experience, even the brand itself. As a brand, any credit card brand that you take, right? You don't trust the bank as to what charges might come on your card. You know, if you get late by a few days, there will be a huge revolve fees or huge interest component, which is very difficult to back calculate. So there's a real opportunity to create a very feature-rich, experience-rich, honest brand to the customer, and that's the second thesis. That's what we are building, and that's why Prayank has very kindly invested in me, hoping these two theses will turn out to be true. And as I said, we are still in beta, hoping to come out of beta next month. But that's enough about me. I think it's somewhere unfair. I'll change tracks now. I think it's somewhere unfair that Prayank has been made the moderator. He's the only investor among us, and I'm pretty sure that many of you aspire to start a fintech company. So I think we should hear it from the horse's mouth as to what it takes, how he evaluates fintech companies, and what it takes to get a check from him.
All right. Okay. I was not expecting to answer questions. Like I'm like supposed to be asking the questions. So reverse grilling. All right. So guys, thanks Nitin for that. And 4 years ago, actually not 4 years, 3 years, 3 years ago, we started thinking about credit in India. And Axel, to be honest, in fintech, we have invested in close to now 15 odd companies. Nitin's company, and then we see first fintech as from an investor perspective as a broad high level umbrella, and within that we have things like insurance is one vertical where we invested in Acco, Onsite Go, CoverFox kind of companies. Then we've invested in investments like Scriptbox is, for example, one big play. Then you have investments in savings. Then in credit, we have basically broken credit into SMB credit or B2B credit and retail credit. So retail credit is, for example, where Nitin's company Uni is, and then you have MoneyView also sitting there. So MoneyView also does personal loans, but it's different. Like the interesting bit is here, like Ankush, Ankush focuses on blue collar workers. MoneyView focuses on the next segment of workers, and we found that the market is huge in India. So you could essentially do a lot of plays in credit. We don't actually have a purchase finance credit company like Zest, for example. We haven't been able to invest in them. Actually, truly, we haven't been able to invest in Zest money. We have tried, but Zest is just growing too fast. So, and then we have B2B credit. So in B2B credit, interestingly, we have actually a lot of plays. So we have plays which are industry specific, like agricultural credit. So where Samunnati we have invested in. We have SMB credit where Indifi is, which is a lot more generic. And then we have export-import financing credit where Drip Capital is playing in. So we have been, interestingly, our B2B credit portfolio is a lot more richer, I would say, than the retail credit portfolio. And then finally, we have in fintech, we have all the support tools, all the new innovations which are happening, like collections mechanisms. So Credgenics, which a lot of NBFCs use now in India, or Probe Equity, which provides a database for private companies and basically credit layer information, which banks can use for credit decisioning. So our portfolio, when we think of fintech, and if you guys are thinking about launching a fintech company, it's not just about credit. It's a very vast majority. And I've not even talked about the new age, neo-banking style companies which are coming up, like Ankush mentioned. There's just so many opportunities here. So there's just a lot of models, and there's a lot of hype, and there's a lot of news around there. But fundamentally, as an investor, we start off by, where should we look and where should we go and invest in, right? And I think this data is publicly, so we start off with data, like what is the scope of credit in India first, and then you go and find areas which is growing, and then you try to project what's the future. So let me give you some numbers. So in 2019, 2018 end, we did this study, and the market in India is $1.3 trillion of credit, which is growing at 10% year on year, and it is split across 4 big major areas. So retail credit is essentially close to 325 billion, growing at some 22% year on year growth in 2017-18, which is essentially a very fast pace of growth. Then you have services where it's a 336 billion, so 0.3 trillion essentially, huge markets like 16% growth year on year. Then you have SMB credit, which is essentially $500 billion, which is growing at 3%. Now, the interesting thing is, even though SMB credit is growing at 3%, you find a lot of fintech companies funded by investors in that market, simply because there's a shift which is moving away from banks to NBFCs or new age fintech credit. So, and then finally you have agricultural credit, which is 154 billion, which I find very surprising, to be honest. That agriculture being such a large industry in India is still just a small amount of credit available to that industry, right? And like, just like any other VC, so you look at all of this and you say, okay, like I chose that, hey, I need to focus on the fastest growing segment, which is retail credit, and then figure out what can we do there. And you can break it up further into housing, consumer durables, credit card outstanding. But then some models are not for VCs, right? So, for example, housing credit is probably not for us, not for a lot of VCs. Like, the starting requirements of cash are very high, so you have to pick and choose where you can do fast revolve, where you can get money to talk for you very quickly, you can get distribution move very fast. But hey, that's still a very interesting segment for one of the fintech founders to start their own business. So you have to choose which part of the segments you want to play in, and we decided to play in consumer credit cards and consumer durables, and personal loans, and that's why you see MoneyView in personal loans. That's why you see Nitin's company in credit cards, and in consumer durables we don't have a play today. And that's why I was saying, we've been trying to invest in Zest or others.
I think I
But
should reach out to you again, Priyank. Separately, we should talk.
yeah, I think we said, hey, but it's going a next step. So why is this enough? Like, just saying $300 billion of credit, is it good or bad? Like, but finally the companies need to make money. So we actually focus on net interest income, and by our projections, just across these three segments, close to $13 billion of net interest income is available today in the markets, and that will expand to close to $24 billion of net interest income in the next 5 years by 2025, right? And that's where huge amounts of $100 billion companies can be created. Is what our bet is, essentially. So that's the way at least we think. And I know it's a very high level funda approach, but we have to take that high level funda approach and say, hey, okay, so, and then you go next level. Okay, so how is this possible? So, like Nitin said, a large number of Indians have access to at present. Like, we studied CIBIL, right? So CIBIL has, interestingly, roughly 600 million Indians have presence in CIBIL, which I found very surprising when I got this data. But there are only 79 million people in 2000, and this is a 2018 number, who had access to credit. So there's a huge gap, and people are not serving. So I think that's where retail credit comes in, essentially. So sorry, so that's long-winded answer, but that's the way we look at it. So we look at the spaces, and Ankush, you want to say something? You want to add?
No, I just think you took me back to 2017, 2018 when I was reading up the exact same material that you are talking about right now. And I was building up the thesis for a while.
Yeah. Yeah. So it comes from data. Yeah. Yeah.
So I think, and I think one of the questions is about, how, why we are, our fintechs only targeting people who are outside of this credit footprint, or are we targeting the top clients, or are we targeting residual clients? So I think this is quite an interesting panel where we see, I think, all the segments. So obviously, Uni is clearly more on the top tier of the credit card or the super prime segment. Avail is a bit more on the blue collar, and we are targeting the most of the middle segment, which is, like exactly as you said, Priyank, that 79 million or so actual credit scores, while there might be thin file, or there might be trace on the bureau, and the opportunity, the way we see it, is for us to change how we do the scoring, and therefore we bring more and more people into the credit spectrum. So that's definitely one of the things that we have been focusing on.
Great. Thanks, guys. So maybe I'll take one of the questions which is mentioned here. So there's this question of what were the losses or NPAs for companies last year because of COVID, and we have Priya and Ankush. Maybe you could talk a little bit about how was COVID experience for you guys. At least from our portfolio, most of our companies just stopped lending during that 3 to 4 months of lockdown, and suddenly when they came back, everything has been like booming. So what has been your experience?
Sure, maybe I can go first. So definitely it was a black swan event, and it's a as a credit, I guess, platform. We were pre-COVID, we were always asked this question that, oh, your models are amazing, your performance is amazing, but what happens if something bad happens? And something bad, did happen globally. So I think in that sense, it was a very good learning experience. It was something that also ensured that our models and our underwriting and everything that we had been doing for the last 4 or 5 years kind of we were able to prove that that has been able to, I guess, face this massive test. Definitely the period of April and May, and given that we are point of sale financing led, and given how severe the lockdowns were in India, and even e-commerce was limited to essential services, which is primarily groceries. And therefore we did see we actually ourselves brought down origination because there was just no point kind of disappointing customers if they are actually not able to use the credit limit that we have with them anywhere. But since then, I think we've seen an acceleration, right? And I think Sequoia put out this memo yesterday, which said that COVID has accelerated things, and the time is now for companies to seize it. So we definitely feel that that has happened for us, given that from day one we built something that was completely digital, something that was mobile friendly. It was mobile first. During COVID, obviously we saw that consumers were actually increasingly moving to digital payments, especially UPI, even over cards, right? So the form factor has completely changed. People want contactless solution. So, for example, if you look at point of sale and how traditionally point of sale was done in India, where there would be an agent in a store and you would walk into a chroma and then you would sort of give your documents and then the store guy will basically say sign here, sign there. And in COVID, I think people just do not want contact. They don't want to touch a piece of paper, and they are all suddenly the consumer behavior has shifted to completely digital and contactless. The other thing that we saw was we work as a platform and we work with other banks and NBFCs who are actually the ones who are providing the credit. And they suddenly realized that they didn't even have the basic kind of business continuity plans in place for the first few months, and they definitely realized that all their programs were not completely digital. And when I say completely digital, it is basically no human intervention, no paper, no video calling, things like that. So I think there has been a significant shift in consumer behavior, and there's also been a significant shift in the ecosystem, and acceptance around that digital is really the way for us to go, and whatever we do has to be completely digital and digital first. And it is not just about creating a sort of a application form that is online and then there is a human being that goes and does the backend processing and things like that. So it is about end to end digitalization and automation, and that's something that we provide definitely as a service to the banks and NBFCs. And from a customer standpoint, we were always a completely digital and mobile first solution. And I think it's really a time where we have seen that form factors such as UPI have completely leapfrogged other mechanisms. So I feel that whatever we do in the next few years has to be around that kind of customer behavior and customer journey. And it's I feel that for someone who's trying to do digital credit or anything in digital payments, of course, the time is now, and everything that we were working on has been basically accelerated and jumped forward by at least a couple of years, basically.
Great, thanks for that, Priya. Just in the interest time, I'll move along. Sorry to, it is very interesting that both Priya and Ankush have actually come back from international geographies and set up shop in India. And Priya and Nitin has this is actually his third fintech venture, right? So our there's a wide variety of understanding of macro themes, business models between Priya, Nitin, and Ankush, and it would be very interesting. And maybe I'll start off with Ankush first here. Sorry, so Ankush, how has your experience in the US and then coming back and working with Ola taxi drivers shaped up your
Hmm.
philosophy? How you see macro? What are since the title of the our panel is future of credit? What are you seeing on the horizon? As well. That will be great, and then we can probably get to learnings from Nitin and then Priya.
Got it. So, Priyank, so instead of actually going macro, I might go a little micro
Yeah.
over here and granular in terms of consumer insights, because in the segment that, I mean, when I was in US, my objective was always clear to come back to India and start something. Financial services was a chance occurring because it was an opportunity. Was always focused on building something for the next billion people, right? The vernacular segment of the country. And the segment that Avail is servicing is basically the urban poor, right? Not a lot of work has been done in this segment in terms of financial services in the country. Um, in fact, if you look at other products, I mean, any kind of product or service in this segment is massively underpenetrated, not just financial services, right? Except, let's say, FMCG, which I believe has cracked this segment, and then telco. So anything which has cracked this segment has been through sachetization of their products. And that is what we also are trying to do at Avail. We can draw a few parallels between what Avail is trying to do, and our learnings have somewhere come from microfinance sector. But for Avail, it is not about, let's say, not about pivoting or rethinking, but it's been more along the lines of unlearning what we already knew about ourselves and how we behave as customers, and then learning about the segment that we are servicing, and then evolving our products along those lines. I mean, lending is the second oldest business in the world, right? So, and it is in the segment where Avail is servicing the segment which is extremely credit hungry. So, I mean, if you want to give money, people will be there to take it. So that's not a product market fit is not an issue. Um, so it wasn't about pivoting, but more about ensuring customer adoption is high, the experience is good and strong on the platform. And I'll quickly take one or two examples over here on how we at Aware had to rethink a few parts of financial products specifically for the segment that we are servicing. Uh, so the first area for unlearning for us when we started was in collections. Right now, the traditional banking world has been built on EMIs, right? Monthly installments, equated monthly installments, and that system works beautifully for people like you and me, basically anyone who earns monthly. But asking a construction worker or a gig worker to pay monthly loan installments when their income might be weekly or fortnightly, that system is bound to break, bound to fail, right? So what we had to do was match the EMI or the collection frequency with the income frequency, and that actually brought our default rates down significantly. Right? I mean, a lot of noise is there in terms of alternate data underwriting, etc. But I think in the lending business, you have to look at underwriting hand in hand with collections, and that is what that's what the first step for us was. That's one example, and second is actually something more recent, something very interesting, more customer insight driven, which is I was actually talking to a customer recently, and because we are giving personal loans, unsecured personal loans, we don't necessarily know the end use for the loan. So I asked the customer, what did he need the loan for? And he said that he actually did not want a loan, but he wanted to save money, but he could never get into the discipline of saving money. So he basically took a loan from us, put that money in the bank, and he said, now I have to give the EMIs because otherwise CIBIL score will go bad. So fundamentally, that customer in our segment is taking a loan and converting it into his own savings instrument. Right? And that is the kind of unlearning that I mean that we need to do. Now, is there a better, smarter product that we can build for that? And this customer is not alone. There's a cohort of these customers, and can we build an alternate, smarter savings product for them? And that is what I mean by the evolution of product for us.
But Ankush, one question. So this particular segment, how much of financial literacy you're under, like you said, the point you said he that like I would not imagine a blue collar worker worry about his CIBIL score. For me, that is a insight in itself. Are you
Hmm.
seeing that happening? Like people are aware of CIBIL scores, or you have to make the task of educating them that if you don't do this wrong thing, then this is going to happen and all of that.
So are they credit illiterate? No. There is some understanding already there that if they take a loan, they have to repay. There's a central repository which is there. My assumption initially was that they are credit illiterate, that the segment would be illiterate, but I've been actually pleasantly surprised. But again, the blue collar segment is not you can't put a one blanket over it, right? There are multiple cohorts within this segment. Some segments are very, very self-aware. Some customers actually take a loan just to build the credit persona, the CIBIL score. But some segments, they don't know what a CIBIL score is. But we get both customers on the platform.
And any learnings which you've seen similar models outside of India, and how is it different in India?
So outside of India, I mean, the segment is something nuanced, right? I mean, you would, again, as I said, we have taken examples from the microfinance world, be it in Bangladesh or somewhere else. But outside of India, there are certain examples in Africa which are still young. So the industry in itself is very, very young, right? I mean, if you go above this segment, that's where the banks, etc., operate, and the NBFCs operate. If you go below this segment, that's where MFIs operate. This segment is the missing middle in the Indian financial ladder, and that's what we are trying to service.
Right. So moving along to Nitin. Nitin, you first build a $500 million plus, and maybe now $1 billion kind of payments company. Then you build a $500 million plus embedded finance company sitting inside Ola, and now you're on your journey to build another one. Hopefully, a $10 billion company or a $100 billion company.
Yes.
So, what were your learnings along this path?
So I think, Priyank, I would talk about two trends. First, when I started PayU in 2011, I think the total number of people who were buying online at that point of time, transacting digitally, were about 7 or 8 million. That number today stands over 100 million. These are people who are transacting digitally. The number of people who are transacting, including cash on delivery, would cross probably 200, 250 million. So the market size has grown massively. And because the market size has grown massively, the first thing which is very clear is that if you have an idea where you can get a few million customers, you are worth very, very valuable. The market size is so large. And this 100 million digitally transacting customers will be 300 million, 400 million, probably 500 million as GDP grows and as these people get access to, as disposable income grows, basically, fundamentally. And we'll play our own respective roles in giving them access to line of credit, etc. So that's the first macro trend that I definitely see. The second macro trend that I definitely see is the emergence of niche or smaller segments. Sorry, I have a bad cough. I'm glad we're on video. मैंने अब तक तो मेरे को लेके होते सब. So no, the best thing is that the Indian, and as Ankush also pointed out, the segment has so different needs. India has so different needs that you cannot demarket it into actually 2, 3, 4 segments. 1 million or 2 million customers define their own segment. And the needs of different type of SMEs, different type of consumers, different type of anything, right, is very different. And one needs to build products specifically for those 1 million or 2 million customers. And if you can build a product for 1 million customer in credit clearly, right, you can be worth $1 billion. So the second trend that I clearly see is the emergence of smaller niche segments, where these segments are saying, I need a better solution for me. Don't fit me into the same shoe as you have been doing it for everybody else. If you can build a better product, I'll migrate to you. And that's why you see an emergence of solutions creating to different segments. SME is a great example, right? In SME, you have done a bunch of investments, and still you know that today in SMEs, a retailer dukandar is so much different from a B2B distributor. It's so much different from a manufacturing SME. It's so much different from a typical corporate startup like us. And each needs their own different solutions. So these two trends, the expansion of market size, particularly of online digital players, and second, this emergence of niche markets where you can build products for them, solve for them, and build valuable companies are the two trends that I see.
Very interesting. And given the fact that Priya mentioned she has 4 to 5 million customers, and like Nitin said, each million customer can get you $1 billion company. So that gives you a scale of size of estimate. Like we are talking probably to a $4 or $5 billion company potentially in Zest, right?
Yeah. So, and actually, there's a very good question. Maybe Priyank, I can take that in
Sure.
also continuation with the macro and the international theme that we're discussing. So, there's this question that says, a lot of fintech companies seems to be building their value prop around credit is a want product and rather than a need product. And how correct and sustainable is this concept? So, actually, and me and my co-founders, we the three of us used to work in a fintech company in London, and my role towards the end of that was also to make investments in European fintech. So as a result of that, I guess I've been studying fintech, since 2011. So more than a decade of looking and investing in and also operating and building various different fintech models. So definitely, I think in the West, especially the fintech 1.0, if I may call it, with the lending companies that originated in the West, were very much around the want piece, or sorry, the need piece actually. And that was primarily because financial services in the West, and I'm talking UK, Europe, US, it's a highly credit saturated market, right? So most people have 2 or 3 credit cards. There's mortgages, there's auto loans, there's leases, there's all sorts of credit products, and most people have access to credit. So a lot of the fintech companies that were built in UK, Europe were more around the need, and that need was basically the unmet need that was not met by any of the banking or the credit card or other products. And therefore, they just focus on that. And obviously there was also the disruption around technology and making it much easier and mobile first and things like that. When we started looking at India, we realized that there is a huge segment that has the need, piece, and then there is also the want. But the want in India is also very different from the want in the West, right? So, and especially actually now, if you look at what's happening in the BNPL space in the West versus what we are doing in India in the BNPL space, the need is actually, the want is very different. So, for example, in the Western BNPL space, most of and a firm, went public, and they disclosed that 25% of their origination is for Peloton bikes. These are super expensive bikes, right? Which is a pure aspiration product, and you can definitely live without it. And this is a pure want product, and it's just about aspiration. It's about the Silicon Valley wanting to use a firm to buy Peloton bikes. Like, it's a very niche, right? But 25% of their portfolio is through Peloton. Afterpay, most of their portfolio is through beauty products and fashion, right? In India, obviously, we don't have the Peloton bike equivalent, and beauty and fashion, and definitely in the online segment, those are relatively small, although Nykaa and others are doing a great job on building that segment. So, what is the want in India, right? Or what is the aspiration that we are solving for, and what is what are the types of products that people want financing for? Actually, it's electronics, it's mobile phones. And why is mobile phones important? So one is obviously the aspirational piece of it, where people like us are probably looking to finance their Apple phone, which is super expensive, and it would be good if we get a 0% financing deal, so that it kind of we can pay for it in installments, and it's easy on our pockets. But then there is also the entry level, Xiaomi or Vivo or Oppo phones, which actually maybe some of the Ola drivers, they want that phone so that they can, get on Ola, and that actually becomes their source of livelihood. So again, it depends on the segment, and it really depends on the product that you're financing. So I think this exactly as we were discussing, that even if let's say we have 8 million customers, and but there are effectively within that 8 different segments, and understanding their want, is it a want or is it a need, even in a product like ours, which is structured as a want product, could actually be still be a need product and something that is impacting their livelihood and making their lives better, compared to just being a frivolous expense or something that they can actually live without, and they should not be using credit to fuel their lifestyle. So I think in India, there's definitely, I would say, it's a much more nuanced approach as opposed to the West, where now, especially with some of these products, we do feel that there it's a much more ease of use, convenience, simplicity, and more digital. Whereas in India, again, depends on the segment. We might be solving for simplicity, ease of use, features, and that is more on the top end of the segment. Whereas as you go lower, you're still solving for access, you're solving for price, you're also always solving for speed and convenience. So I think many different nuances and many different segments, and definitely a much more tailored approach is needed in India as opposed to the West. I think one more point I would add is that fintech in general is a very ecosystem play, and more because there's always regulation in anywhere in the world. Finance is a heavily regulated industry, and therefore that means that banks are always set up and always regulated, and they are always the linchpin of financial services in any country, right? So fintech very much is an ecosystem play. You do have to work with the existing regulatory regime, the existing banks and the other financial players. And I think that is a lot more important in India as opposed to the West, where you could still, be work in a silo, and you could create a. You don't have to be as well integrated with the banks, and especially we saw this in the fintech 1.0 that was happening in the West, was that the fintech companies would really say, or their PR was very much around, oh, banks are horrible and we are much better than the banks and we are going to kill the banks, for example. This was definitely a narrative that some of the fintech companies have used publicly, and that has been their playbook. Whereas in India, I think definitely all of us have stayed away from that playbook, and there's a lot more collaborative approach here in India, and I think that is very much needed, and it is definitely a lot more ecosystem play as opposed to a standalone kind of a play in India, as when it comes to ecosystem and regulation.
I think it's a very interesting lens to look at fintech companies from wants or needs, right? So the aspirational, fueling your lifestyle, and do you really need the product, right? And my 2 cents on this is like if you look at insurance in India, when we as investors invest in a company in insurance in India, we think it's a need of the business, a need of customers. But when you ask customers, they think it's aspirational. We don't really need, you have to educate customers. There's a financial product which actually you should use in your financial planning, but it's actually a want for them. So I think it's a very different, but large businesses have been built in, like Zerodha, unicorn company in fintech. What you call trading, broking business a want or a need? I would put it into want, but the guy who's actually doing that business, for him, it's a need.
Correct.
So I think that's it's a very interesting. What Ankush, how would you and Nitin, what would you classify your businesses as wants or needs? And it's just an interesting, perspective or angle to look at your own business with, and maybe how do you convert a want into a need for your customers?
You want to go first?
Nitin, you can. No, Nitin, you can.
Okay, I'll go first. See, if you look at credit card, right, about half of the users of a credit card use it as a tool of convenience. Half, or 40 to 50%, which is, I'll pay my bills back on time, I'll collect reward points, I'm anyway going to make this transaction, I get free reward points, and I get free credit for a month. I think that's definitely the want category. But about 50-60% of users use credit card as a tool for affordability. What does that mean? They use that tool to buy things on EMI. There's a 0% EMI or convert to EMI option. They get access to a large credit line, so they can buy more if they want to buy something. And there are people who use this as a cash flow management tool. So people have imbalance between their income and expenses in a month, whatever may be the reason, and they use it for that. So whenever something becomes an affordability solve, sorry, in my mind, becomes a need when you're solving affordability for users. So I would say that, so I'm solving for both affordability and want, or need and want. Half of my users would fall into the want category, and half of the users would fall into my need category.
Very true. Ankush?
I think just to close the loop on that, even in what we have seen is actually, yeah, I used to love making the statement that lending in India is not a nice to have; it's a need to have. And actually, my thesis now is actually slightly different. It is both. I think the example that I gave of one customer using our lending product as a savings instrument. A lot of examples are also there. The customer feels now the availability is there. He would do something which previously he might not have done, not just because it was not affordable, but because he didn't think that he could do it before. For example, some customer might say, I had gotten a small injury during work. I was not going to see a doctor, but because now money is available, I will go see a doctor. Right now, that's not necessarily a need for that in the mindset of that customer. That's not a need, but it's nice to have for him now. So that's the evolution that we are seeing in our space also.
Ankush, I think that's a very interesting point, right? So, like, first of all, I think what we are all saying is that there's a look at your business from a cohort of customers, and each cohort can create large value, is what we discussed. And then what we also think, cohort of customers would have wants and cohort of customers would have needs. I think Ankush also is talking about just making that available, financial product available. You're unlocking something which the customer never thought is possible, right? And I think, like, I mean, I've actually experienced that in my life. Like, when I used to go to, when I went into college, and one of my neighbors, he went to a international college, and my father was like, "Why did you not go?" And I thought you could never afford it, and like, for me, it was an affordability question, and I was a kid thinking about this, and my father was like, I would have figured out the finances somehow. But now, I mean, that's another, education loan itself is a huge market now, right? So, and I think but at least I, as a kid, never knew that somebody can give you money as a loan, right? And so I think sorry, I'm just digressing, but I think it's very interesting to think of it from want and needs perspective. And I was very surprised when I looked at US market, and like, why is buy now, pay later happening in US? Like, this is, and in US and Australia, all these countries are so credit rich. I mean, the high level of penetration. And interestingly, there's also demographic behavior changes is happening. Like, young people don't want to use credit cards over there, and they want to limit exposures. They want to, like, the example Ankush gave, that I'm getting a credit line and I'm using that as a, like, intent was credit, but from the company, but they're using it as savings kind of a product, right? So it's very different behavior, how as the ecosystem matures in financial products, customers respond to those. Probably not second order effects are different. So it's very, very, very curious how this plays out. So hey, so I think we are towards the fag end. So one question for all of you. A lot of aspiring entrepreneurs. What your advice would be looking for the next 5 to 10 years in India? If somebody was to build a business from FinTech startup, what would you advise them to do? Something which nobody else. What's the secret here? So who will go first?
Yeah, I can just quickly give a quick second answer my thoughts on this. I mean, we are still on day zero of FinTech in the country. It's very, very young compared to where we can be. The penetration of credit as a facility or other financial products is very minimal. Long way to go. But specifically, when we're talking FinTech, right? The tech part of FinTech in India is still very young. Most of the infrastructure that we are at a stage we are building that infrastructure to get the best out of tech and data. Right? I think you will actually see the true impact of technology first thinking in the next couple of years. Right now, it's still very early for us. I mean, from a product point of view, there's a lot of interesting other products that we can build, but from just infrastructure point of view, I think technology is a big enabler that we have yet to fully explore.
What I'll say is what I call as a rule of 20%. So there are tons of observations that one can make and tons of theses that one can make. And as I said, right, there is this emergence of micro customer segments. So if you can define a customer segment, where if you pitch to 5 customers, cold call them, and one of them take your product, 20%, right? I think you have found a fantastic product market fit, a very strong product market fit. And even if that customer segment is just 1 million strong, go for it. Sorry. So look for, before launching a business, look for that strong product market fit by testing that thesis out, is what I recommend.
I kind of agree with what Ankush and Nitin have said. So definitely, I feel that we are on day zero. A lot of stuff to be done. I definitely feel that we can do more on the technology innovation piece. And the other thing, the way I think about this is that definitely we need to look at the entire value chain and look at how each of these can be reimagined or redone. And I think that's where the innovation comes from. So definitely look at the entire value system and see what are the areas that can be changed or done differently. And agree with Nitin that yes, it has to be about finding the product market fit and understanding consumer behavior. And as we discussed, there are so many different consumer cohorts that are actually available in India, and there's so many different opportunities that are available in India. That yes, we should all always focus on consumer or whoever is your customer and build around that.
See, I see nobody's giving the correct segments because all of them are trying to build the product. So let me unwrap that a little bit. Let me talk about some of the investments which have happened in the space in India and globally, which I find very interesting. To Ankush's point, right? So if you look at India fintech stack, like the banks, what the stack they use, we are seeing interesting innovations happening there. So when you think of a bank, you think, oh, HDFC and ICICI Bank, they will have the best systems out there. Everything is sorted. They know what they're doing, and their best technology is in that. But interestingly, lending banking systems are very heterogeneous. So you have thousands of banks, and banks come in small shapes and sizes. Cooperative banks, they're state banks, they're very very small banks, and not all the banks have the technology spend available. They don't have money to spend on technology, so they buy off the shelf. They need somebody to come and help them launch products. I think in India there are interesting companies like Zeta, like Yap, companies that are building out these infrastructure for banking. These are startups essentially, right? So I mean, they started off with small companies, built unique products which help banks, for example, launch credit cards, launch so Devesh, there is
Okay.
a background noise from your side.
Yeah.
So,
Okay.
these kind of companies which are.
Can you call Vibhor? The phone number is in the FinTech spreadsheet. You have that, right? Okay.
Devesh, can you mute yourself, please? Sorry. So that is one set of companies we are seeing. So you can build more. I mean, APIization of banking infrastructure, lending infrastructure, your NBFCA. So some of this is from regulation. Some of this is just from new technology. So that is one segment we are seeing. And we, for example, have invested in a company called CredGenix. Like I never thought that people will require another collections efficiency. Like this must be an old industrial space, but looks like there is a lot of room in one of the fastest growing company. Then second, space which we've been seeing is millennials. Like the way our parents taught us how to save money, buy insurance. What kind of financial products we buy, invest. All of that is changing. It's just different. People want everything on mobile. People want neo banking, faster experiences. There is a whole segment of people who want, like we have seen companies like people who train, for example, finance for women in specific. Till now, there was not enough participation of women in the workforce. Women are coming, they're making money, and now they want to get educated on how to save this money, how to grow that money. And it is very surprising, like for example, my wife's a doctor. When I talk to her, she's like, I don't know all this mutual fund stocks. You invest for me. And like I'm trying to teach her, and I'm not able to keep a cool with her to explain stuff in the way she wants. She like explain me from 101, and like that's too basic. But then there are companies like Basis which basically have this community of women helping other women understand finances, understand how to take a step, how to invest in mutual funds, and cohorts of users are able to just find other like-minded users, just like Nitin said. Maybe this is a very small community, million, 2 million, 10 million, whichever that is, and they're just able to offload questions without getting all jargonized. Yeah, array, mutual fund समझ में नहीं आ रहा है, ETF क्या है वो समझ में नहीं आ रहा है. Like you're able to figure that out. So there is that whole segment of people also getting built, and I'm sure for example, Ankush, blue collar workers will be building communities within themselves as well to explain how to use a whale also, right? So yeah, so that is the second segment of audiences. Like we have seen credit cards for youngsters and things like that. So yeah, so I think there is enough scope and opportunity if you start breaking down. Like Nitin said, it's very interesting. Don't think of it as monolith. Think of a niche first and see if that niche is applicable, and you can just start on expanding that niche. I think, sorry, that's where I would be. I think we are coming towards the fag end. I'll probably pick one other question from the questions that have been asked. So just looking at the questions. Any questions which you guys like, we can pick that up also. So yeah, I think so. Okay, so let me pick this question. So this is a lot of questions are being asked on underwriting, and for a fintech company, is underwriting more important than distribution? How do you guys put that? As a VC, I can tell you every company comes and tells us our underwriting is different. But how as entrepreneurs, you think what is more important?
I mean, so, and actually this is something that we have focused a lot on, because we focused on both the distribution and the underwriting. And in fact, this is also why we chose to go with the point of sale model, because we felt that it would actually be positive in terms of underwriting, in terms of the signals that we get from the product that someone is purchasing. And Ankush, mentioned this briefly, that getting the end use is a very important signal in terms of credit assessment and lending. And so for us, it kind of goes hand in hand for us, the distribution and the underwriting. And something that I alluded to earlier, that it really depends on the product that they're buying, and also the segment is also completely different. Also, a customer who is purchasing an Apple phone offline is completely different from someone who's purchasing a Xiaomi phone online when their flash sale is going on. So these are important signals for us. So we actually have built our product around the distribution and the underwriting and also the collections, all kind of working hand in hand.
Chicken and egg, which came first, the chicken or the egg? Right?
All together, honestly. And this is why for us, we chose point of sale financing, because this is our fundamental thesis, that it all has to work together. And this is the point I was making earlier, that you have to look at the entire value chain and you have to solve for entire value chain. Otherwise, then you just become a layer on top, right? And you don't control your own destiny. So for us, it wasn't chicken and egg. It was something that we needed to solve together. And this is why we chose point of sale financing.
Got it.
So Priyank, for me, my view is that distribution cannot come at the cost of underwriting.
Okay.
And I'll quote Rajiv Jain in a second-hand. This is a second-hand story that I've heard. Rajiv Jain is, of course, the CEO of Bajaj Finance, the largest NBFC in the country. He says, "मेरे को risk नहीं बढ़ाना, 40% year-on-year grow करना है," which basically there is so much opportunity in distribution that you can continue to go distribution without compromising underwriting or compromising risk. You have to find a distribution solves without compromising on underwriting. So underwriting comes first very clearly, and then you have to solve for distribution without compromising on that underwriting.
Ankush, any view, and then we'll close it. Yeah.
Just one line. I mean, it's not just distribution versus underwriting. It is collection, then underwriting, and then distribution. Giving money is obviously easy. Collecting money is hard. So focus on underwriting and collections together.
Yeah, sorry, I was in the VC mode. You can burn money. So I know. Hey guys, thanks. This has been a great panel. Thanks for each of you. Really appreciate you guys taking out the time, and thanks to IT Bombay for inviting into their home, into their alumni group for discussion. Thanks a lot. And
Thank you, Prayank, for moderating this so well.
I hope
Thank
Yeah,
you so much.
Pleasure to be here.
all right.
absolutely. Thank you, Priyank, and thank you, IIT Bombay, for having us.
Yeah.
Bye.
Bye.
Thanks,
Bye.
guys. Bye.